All right, what's up, everybody? Dave Savage here with Mortgage Coach and Trust Engine. I am interviewing James Allen out of Hartford, Connecticut. West Hartford?
West Hartford, yep.
West Hartford, Connecticut. To say he's a top producer is an understatement. You know, last year he did 280 first mortgages. And James, when you told me the numbers and you said 375, was that first and seconds? That was the combined?
First, second, and third is because we have third lien products here that we sell. So
Yeah, and the way he is delivering advice in the marketplace with price is pretty unique. Just in the prep call that we already had, the way he is helping home buyers overcome affordability challenges is pretty unique. He's doing bond loans, he's doing all kinds of loans, and I am just excited to hear how he's winning in the market today. So, James, welcome to our community, and I'm looking forward to this conversation.
thanks for having me.
Yeah, so I guess you don't need to say what city and state because I already said that, but just describe your mortgage practice really quick for everybody, just so they kind of understand, how you see your mortgage platform.
Sure. I did one refinance last year. So
Okay.
I'm a purchase guy. It's what I do. It's what I focus on. Even in refi booms, I'm trying to snatch purchase business. It's like, that's what I want to be great at. So we try to really specialize that in the marketplace. That's what our real estate partners know us as. We do refinances, of course. I'm not going to turn them away. But if you look at Realtor.com, Zillow, all that stuff, Hartford County, where I live, was the hottest, most competitive market in the United States last year in 2023. And so, we were really proud to be ranked number one in that market. And it's, every market is challenging. So I don't want to think it's harder here than elsewhere. I think it's hard. It was hard everywhere last year, but we're in a tough market like everywhere else. We've got all the same issues everyone does: appraisal gaps, waived mortgage commitments, no inspections, 21-day closings on every single file, 16-day commitments, underwritten files up front on every single file. I mean, it's a lot, so that's where we're at. That's the market we're in. You want to play, you got to compete.
Love that. How many mile radius is most of your business? Are you 15 miles and in? What do you think the radius is of most of your business?
Yeah, I would say the majority of it is Hartford and surrounding counties. We'd cover, I'm licensed in Mass and Florida. I probably did half a dozen loans in those places, right? Connecticut, you can drive from one side to the other in an hour. So it's
Right.
not that big of a state. So 15 miles is probably pretty close to, the bulk of the business. Yeah, maybe 25 at the most, but it's not a very big area.
I brought that up because I interviewed Chris Smith, the author of The Conversion Code. He also co-authored Exactly What to Say for Realtors. And it was the first time I ever heard the term, you want to be 15 miles famous. And just hearing you talk, I'm like, sounds like you've done it, being the number one market leader, you've become 15 miles famous to a lot of the realtors and real estate professionals in your market. Is that fair to say?
I would not classify myself as famous by any means. I would think that if you do a good job, that is helpful for your reputation in general. I think I'm one of many great lenders in Connecticut. I have a lot of colleagues that I compete with who are excellent loan officers. They run excellent businesses. I'm among them. So I would not.
Okay, one of the top.
Yeah, I would say that, if there's like probably a dozen people whose names might move the needle in this market when they're on the pre-approval. And that's because listing agents have a hard job. They get 20 offers. They don't know lenders on 16 of them. They know lenders on 4, and then it's terms. I mean, it's shocking that I'm even talking to you about the fact that a lender's name on an offer could make a difference, but it's been that way since 2022. And I don't think it'll be that way forever, but as of right now, it's helpful to have a name that's somewhat known, but we're not the only ones. And there are others that are excellent that I would, give kudos to.
Well, just from what I've seen, and I know how much you use Mortgage Coach, you're really distinguishing yourself. So why do you use Mortgage Coach? Why did you become a mortgage coach? Because it sounds like you were successful before, and how are we helping you and why?
Honestly, there's 2 things that Mortgage Coach has done for me. I don't know that I really knew this would happen when I started. I think I used it because I thought it looked better, which is kind of a dumb reason to do anything, honestly. But that was what attracted me to start. But it really comes down to this. I think you build way better authority when you're giving someone a presentation they can understand in a deeper way, where you're breaking down metrics that are more meaningful than just like a fee sheet. And I also think putting the driver seat with the consumer is the pro play, letting them know that you can have any rate you want. You can have any, when they call and say, what's the rate? My response is, which rate would you like? You know, you can have any rate you would like to have. And it's our job to walk you through and teach you about which one of those rates will help you have the highest net worth over the time frame you expect to hold this loan. That's just a slightly different conversation, I think, that some of my competitors tend to have. And so I've used it for years and years, but since 2022, every non-bond purchase deal, you know, we're using MortgageCoach to present at least 4 options to the consumer, and we're having conversations where we're talking through why we specifically recommend, you know, X, Y, Z, and it's helped us create authority, and it's helped us shift specifically from selling rate to really helping people understand net worth, and that's been invaluable.
Yeah, you know, there are 5 micro lessons within what I call an advice-based conversation with the consumer. And that if a loan officer executes on those 5 little micro lessons, they deliver immense value to the consumer, and they convert. And I think, you know, one of those, you know, the top one is just showing a consumer the power of home appreciation leveraged by a mortgage. And it sounds, by the way you said net worth, you're showing people options, and then you're also showing how that's going to impact their net worth over periods of time. Is that accurate?
Yeah.
Do you ever use the feature where you show the power of prepaying a mortgage? Like, hey, what if you took this loan versus this loan and you prepaid the mortgage?
Sure. So one of the things that we do a ton of is recasting. So we're regularly demonstrating what that looks like. But one of the things you'll be surprised about. So in 2021, one of our biggest referral partners was, and I won't name them, but a fairly large financial planning firm in Connecticut, who sent a ton of refinance business to us because we were doing analysis for them. But a lot of what we were showing was, hey, when you cash flow this much better and you give it back with your advisor at their recommended earnings rate of 6%, here's what happens to your net worth over 8 years or 10 years or whatever. And that stuff was like immensely powerful with getting financial planning partners and winning refinance business. On the purchase side, we show a little bit with the prepayment stuff. A lot of what I do, honestly, like my whole pitch is, and I've got a really structured way that I've basically figured out by doing this a few hundred times. I've got a really structured way that I go through the coach presentation on the screen. There's really specific verbiage I use to kind of like walk people through stuff and then have them hone in on certain aspects of it to basically, you know, sell one product versus another. I could share that if you want, but you know, that's kind of the high level.
You could share that. You could just show that right now. Are you saying you could share that right now?
If you want me to.
Heck yeah, bro. So by the way, while you're getting ready to share that on your desktop, why don't you get one pulled up, and I'll put you on the spot and let's see what he does it. So I can already tell, guys, he's doing all 5 of these micro lessons. He's showing the power of appreciation and how that works with a mortgage, which most people they don't know what that means in a highly personalized way based off the loan they're getting. He knows how to use the prepay strategy, which is one of the micro lessons. But the number 2 micro lesson is showing the power of compound interest, which he already described. He was showing that and showing the power of compound interest. And then the other 2 micro lessons are one, showing options, like option A versus option B. He already said he's showing people 4 options. So that's a micro lesson in itself. And then he's showing it over different periods of time, you know, that matter to the consumer: 3 years, 5 years, 7 years. And guys, you know, the 5 things I just described are things that kids should know when they graduate from high school. The 5 things I just described, people should know as they go between the ages of 16 and 25. This should be like common knowledge in America. And it's not. Like, they don't learn it in school. Most loan officers don't even know what James is going to show us in a minute. And I just want to make the case for folks that if you want to, anyone watching this, you want to optimize your conversion, you want to optimize your success in this industry, learn how to deliver these 5 micro lessons every time you serve a consumer. And one, you'll like your job more. By the way, James, since you went from, you know, fee worksheet loan officer to mortgage coach, do you like your job better? Do you like your role better? Does it make what you do more meaningful and fun?
It takes the pressure of that lock conversation totally off the table. Like I don't have any anxiety about having a rate conversation with people at all anymore. And I remember that being a very real thing for a long time. So I think that that's meaningful. Dave, did you guys just today change the
Yes, we did,
format of
baby.
so
You
like
like it?
literally you're like, hey James, let's put you live. And by the way, let's give you the driver's seat on a brand new format in real time. That's
Yeah,
funny.
so by the way, I forgot to tell him that, but we launched an upgrade. I've been getting text all days long. So far, no one has complained. You know, anytime you make a change to the platform, you know, there's some folks that are like, "Hey, I liked it better this way." But so far, I've had dozens of texts, and everybody is like, "Oh my God, I love it." You know, Sean Herrera woke me up this morning to wake me up because I was already up, but he had a text, one word, "sexy," and I was like, okay. And then a minute later, a screenshot of Mortgage Coach came up and then some nice things. By the way, what are your first thoughts as you're looking at it, you know, live
I
in
think
real time?
I think it looks great, but it's funny because part of my script is referring to the color of the graph in terms of
Oh,
like directing someone to, hey, look at this cut, like the orange graph, right? Like that was like part of the script. So this is interesting because now you're throwing me for loop, but and obviously
well,
it's
you
super.
said you were pretty good ad lib. You know, like,
Listen, we're gonna see how I do here. Okay,
all right,
so
let's share your screen whenever you're ready, bro. And
yeah,
I'm
so
looking
what do
forward
you
to
want me to do?
seeing
You
it.
want me to pretend like you're the client here?
Yeah, just pull it up. You know, I want to honor our time commitment. So let's, you know, just do a three
Sure.
to 5 minute. Ooh, look at that beautiful
You see it?
TCA. Love
Yeah.
it.
So let me. All right. So this is obviously the front end of TCA that I made for this guy, Dean, who did whatever. And so Dean, like everybody, looks at this and like automatically everyone gravitates to option four. That's just what they do, right? Because they just want the lowest rate. At least that's what they think they want. And so it's our job as advisors to kind of, walk them through what that looks like. So the specific, and here I have the preview open, so I'm blowing up all this stuff here. The specific process that I do is I send out an email to the client that basically says loan options dash property address, and then it's got some important info about commitment date, appraisal date, closing date, and when we need to make a lock decision. And there's a link for the Mortgage Coach presentation. And I basically say, hey, pull this up on your computer and let's have a call. In some cases, I will lock the presentation out by going to the preview screen and unchecking this box. And then on their screen, they will get this message where it says, excuse us, we need a little more time.
Oh.
Sometimes if I know they're a hardcore rate shopper, I'll not give them access to this until I'm on the phone with them, right? But
So
many
by the
times
way, Ninja Move, everybody, did you know about that feature that you can present the options and then you can take it in and out? So anyways, nice move. Love that.
so if I go back here,
Hey, by the way, I want to make a note. Notice in the upper right-hand corner where it says English. If you could click on that real quick, this was a nice little enhancement where we made it easier for the consumer to see and toggle between, you know, English and Spanish. So shout out to the design team. You know, we've had that feature for years, but we think it will get used more now that we've, you know, made this tuning.
yeah. So I label my stuff specifically. Option one, fixed 30, whatever. Option two, fixed 30. And of course, the points are all in here if you wanted to look at that. So for anyone not familiar with Mortgage Coach, you can open up the more info button and go to closing costs and all that stuff. But whatever the case, I send this to the borrower with that email. Once that we're on the phone, I'll either unlock it or many times they just have it up. If they're not like a hardcore rate shopper client up front, I just leave it unlocked because there's no reason. And Mortgage Coach, I know this, but the people watching this might not know. When they open it, I get notifications that they're opening it anyway. So I already know they're looking at it. When they look at it, I'm usually texting them, are you ready to have a phone call? And the customer's like, yeah. But we get on the phone. Here's the dialogue. This graph used to be orange. This is still green. This is still blue. This is now purple. So I'm gonna have to change my dialogue. But what I say is, hey, Dean, thanks so much for your time. Hey, before we get started, on your screen, are the graphs to the right or are the graphs down below? Because sometimes they're looking at it on a mobile device and the graphs are actually down below, right? Or if you're on an iPad, or in this screen, I'm zooming in. If I zoom back out, then I can see that the graphs are to the right. So I want to know what they're looking at so I can guide them through the information in a specific way. They'll say, oh, James, on my screen, the graphs are off to the right. I'm like, okay, perfect. Let's look at the graphs first, and then let's return back to the loan options in the grid, and I'll walk you through those options one by one. Would that be all right with you? Sure, that sounds great. Okay, cool. First things first, the monthly payment graph. This one's pretty self-explanatory. I think you're going to understand each option correlates back to option one. So option 2 will save you $16 when you're comparing it to option 1. Option 3, it's going to save you about $66 a month when comparing it to option 1. And option 4 saves you $112. And they're like, I'm like, that makes sense? Yeah, it makes sense. Perfect. Now let's go down to the green graph. All right, we jump right to the green graph. Interest in 30 years. Now, you and I both know you're not going to have this loan for 30 years, but in the spirit of transparency, here's what the numbers would be if you had this loan for the full term and paid it all the way off in that time frame. Does that make sense? You know, and they say, yeah. And I'm like, all right, now question, like most of my clients, if rates were to come down in the next 2 or 3 years, are you the type of person where you anticipate you'd likely refinance out of this product? Or are you the type of person where if rates came down, going through this again is not something you'd want to do, and you might not refinance? And usually, Dave, what they're saying is, yeah, James, if rates came down, I'd refinance. Cool. So if rates came down in 2 to 3 years, you'd be looking at a new loan option. Yeah, that's right. All right, great. That leads us to our this graph here in the middle. This one's a little less self-explanatory. If it's okay with you, let me walk you through it. This one's looking at savings over 120 months, which, as you know, is 10 years. And so if you look at this one, you can see that loan option 4 is going to save you about $10,600 over that 10-year time frame. But what's important to know is this graph represents net savings. So it makes the assumption that you've actually gotten back the cost structure of the loan option selected when we compare this all to option 1. And they're like, well, James, what does that mean? And I said, all right, well, let's look back at the grid. Do you notice how on option 4, your cash to close is roughly $7,000 more than it is on option 1? Yes, I see that. Okay, cool. If we look back at the purple graph, what it assumes is that you've recouped your $7,000 cost, and the actual savings to your pocket is about $10,600 in that time frame. Now, the problem that we have is that we're looking at a 10-year time frame. And so obviously for you, well, from what we just discussed, you're the type of person who would be refinancing were rates to change in the next 1 to 3 years. And so we probably want to look at some different timeframes. Wouldn't you agree? Wouldn't that be a good idea? And they're like, yeah, totally. Well, cool. I just updated the graph for you on your screen. It should have automatically changed to 60 months. Now we're looking at 60 months. And Dave, as you can see, you know, $150 saved over 60 months, not a great option. So I talked that through with them. And then what I'll do is change the analysis down to 2 years, and we look at it. And now, okay, now you can see you're actually going to lose $3,000 by taking option 4. And so the client calls me and they think they want option 4 because it's the lowest rate. And maybe they do. And we talk about the fact that, like, hey, you can have option 4, but if you take it, you're really buying an insurance policy hedging that rates don't go down the way people predict, which is okay. But if you do it, you should know that if you refinance in 2 years, you're going to lose $3,200, right? And so it's very easy for me to say, no, take 6.5 instead of 5.625. If I email them and say, you want the highest rate of all 4 options, they think I'm like a slime ball. When I show them the actual math on this stuff, the light bulb suddenly goes off and they say, you know what, James, you're right. It doesn't make sense to light $3,000 on fire. Please give me 6.5 instead of 5.625. And they're taking that higher interest rate. And so it becomes this thing where we're not really selling, we're selling net worth. So we're looking at that middle graph to say, which one of these options makes you worth more over the time frame you expect to keep this? Now, in different seasons when rates are not high and they're lower, it does make sense to buy points. And so plenty of times we've used permanent buy down and buyer markets where we're demonstrating those things, or we're encouraging people to buy points, and Coach has allowed us to sell through that. Here's an interesting thing. If you looked at my locks in 2022, for the first half of the year, I sold on average 2 points, and many times I sold 3 points. And you might say, well, that's crazy town. Those people are pumped right now because they have rates in the 4s when we have no projection of necessarily going back to the 4s at any point in the future. And those people all bought those rates because they saw the math on this stuff and we talked about where we thought things were going. And that was good advice. Now, if you ask somebody, do you want to pay 3 points on your first call? They're probably going to tell you no. But if you ask those people now if they're glad they did it, they're thrilled they did it. And they wouldn't have ever done it had we not been able to demonstrate, this exact thing. So I don't know if this is helpful, but that's kind of my process. I go through graphs first. I highlight the net savings graph, and then we go back and look at numbers. And it's very easy at that point for me to give real guidance based on the time frame. They tell me I'm going to refinance in 2 or 3 years. Cool. Let's look at 2 or 3 years. Which one creates the highest net worth? Boom, lock calls over.
So James, man, I am so stoked. I got to meet you. I got to see how you use a mortgage coach. I mean, you're clearly a black belt ninja at what you're doing and how you're doing it. If you're game, I would love to interview you, and really have you at one of our Tuesday. I do every Tuesday at 9 Pacific. I do what we call the 10X interview. You don't have to commit here on the call, but I am going to ask you to be whenever you're available, my next Tuesday 10X interview. Is that something you would consider?
Yeah, we can talk about scheduling that. I got a few next few weeks. I know for sure I'm booked up, but perhaps in the future, if it's helpful, and especially if it's helpful to those that are in my ecosystem, that would be cool.
Yeah, no, we've got, over 100 loan officers at Movement that use Mortgage Coach, and we're hoping to have a whole bunch more. And so it would be great for some of your peers, and it would also be great for the audience. I would love when we do the next one to have you come where you showed an example of all the lessons, the power of compound interest. You were showing the net worth in the bottom column. I know you know how to do that. And maybe even, do you do the rent versus own very often where you show a rent versus own?
I do periodically if I need it to convert a lead, but it's so rare that is required. It's a cool feature and it's a great tool. And I do use it. Like if we run a first-time home buyer seminar and someone's on the fence, I might use it to kind of get them over the fence to apply. But it's really infrequent that I would do it these days, to be honest with you.
I project, post the NAR settlement changes that realtors are going to be looking for loan officers who can deliver more value at the very front. And it's going to be a nice value add where the realtor is delivering advice and value, and they're doing it through their, lending partnership. So that is where I think the puck is going, but we can talk about that when we do the next interview. So brother, by the way, would you mind sharing a copy of that total cost analysis so that maybe just copy it? And so it's not the client TCA, but I'll have it in the teaching notes below, and the coaching notes, we'll have a link to one of your TCAs.
Sure. Yeah, I can do that. No problem. I'll copy the analysis for you. Dave, think about this. First, last, and security deposit on a $3,000 a month rent's $9,000. That is the realtor commission on a $360 purchase price. I mean, we're going to be able to show that with this stuff to your point. Like you just actually unlocked that for me with that rent versus buy analysis and showing that commission right in there. That's really powerful stuff.
Well, I just interviewed Sean Herrero again. A lot of mortgage coaches are doing that right now. And when they're doing realtor workshops on, hey, I want to help you prepare for this, they're showing how they're using Mortgage Coach to pay their comp. So I'll put a link down below to a couple of the most recent interviews where we've done that. And let's put that as a lesson, like when we do the next interview, we'll have more time. You'll come prepared. I'll come prepared. I know you better now. And how many loans do you think you're going to close over the next month or so? What are you trending?
April looks like we're going to be 27, 28, something like that.
Oh my gosh, you're killing it. Well, I'm really glad that I got to meet you. Thank you for making time. And I look forward to our next interview, brother.
Yeah, thanks for having me. I appreciate the tool. It's been a pleasure.
All right, everyone watch this. Make sure you follow us on YouTube and check out the links down below. Take care, everybody.